This is US Steel Corp. This is a weekly chart, and we can appreciate that we have this, again, a bullish ascending channel. Prices become overbought relative to that channel. We can appreciate that each occasion it's done so, it's respected it, and it's regressed back to the lower trend line or the 200-day moving average before it's found participation. If you look at the cause of the consolidation, it gives us a couple price targets. The price objectives are $34 and $40, both of which have been met. So following that, I don't really speculate that prices could trade any higher without further consolidation. Given the current breakdown in prices, it looks like this is distribution. The distributive target would give us, or the distributive behavior gives a downward target of $22, which correlates with the lower trend line. So I'm not a buyer here. I think I don't even know if I would short steel, but I would wait for an opportunity to long, lower risk entry, and that would be below 200-day moving average, somewhere around here. All right, so now we're looking at a weekly chart of LULU. We can appreciate the support here, this ascending, this angle of advance here, and that we actually broke it. We broke it with increased ease of downward movement, expanding volumes. This is very bearish. This is a sign of weakness. The price objectives that we get from measuring this are 56, 52, and down to 43. So structurally, we would generally rally higher, test prior level of support, confirm it as resistance, and then we would break down and potentially achieve this $42 target. Look at a daily chart. We really can't rally higher until we kind of build enough cause. So, we do have a selling climax here, automatic reaction. I don't know. I wouldn't call this a secondary test. I probably would just call this like preliminary support. This would be the automatic reaction. This is a secondary test. This here would be a secondary reaction, and we have to retest this low here. And if no supply emerges off this low, we'll probably consolidate till next quarter or up into the next quarter, which may lead us to an earnings run that tests this gap and then potentially break back down or I'm sorry, rally higher, or then to break back down. It's just too early to tell. Okay, so this is a weekly chart of NTES.com just because it's a little easier. Daily chart just shows that we're breaking down, losing the 50-day moving average, and likely heading into the 200-day moving average. A lot of action going on here. So looking at this, I would speculate we might rally, test the 50, and then break back down into this 200-day moving average. We do have a buying climax there, so it's just a matter of where is demand, and it looks like we have supply here. Demand's probably going to be, somewhere through this zone here. But if you look at a weekly chart here, we can appreciate this consolidation period, and I'm able to measure and get some price projections, and that was 250 and 270. So relative to the amount of cause that was built, we kind of became a little overbought, which took us into the upper trend line. So it's pretty cool how those counts work out in relationship to the trend lines. But now we have some distribution, as we looked at on the daily chart, and the counts that we get there is 270 and 240, which just so happened to coincide with where we're at now, and then the lower trend line and the 200-day moving average. So it's difficult to speculate anything further than we're just going to continue within this pretty nice continuation pattern. But I think anybody who's buying here is buying risk. I think we'll have an opportunity to buy around the 200-day moving average. All right, so this is a weekly chart at TWLO. So, we obviously can see this sell-off. We're starting to have some consolidation. But what sticks out to me is this large volume that's here. So we have this large volume. Why didn't prices break out through resistance? And, the character of the session here, the weekly session, is very narrow spreads, no upward price discovery. Looks a little suspect for some distribution. Then prices kind of failed down. We found support. Now we're rallying away following last week. So let's look at a daily chart. The daily chart, we can appreciate that large climactic buying here. We can appreciate that it didn't break resistance, and then now we're fading. But if we look at the character at which prices rally away, we see increases of upward movement here, and every time we pull back, supply is having a difficult time overcoming demand. That may suggest that this is accumulation. Additionally here, this is a very bearish session, and bears really failed to take control and drive prices lower. And here we are again. So following this distributive effort here, or maybe some accumulation, prices fell, At this point right here, prices could have just broke down, but you can see it found support this prior level. There's buyers that are here. Additionally, the narrowing price spread, you can appreciate that volume's contracting. So that suggests that as prices are falling, there's not a lot of panic. This looks like it's in strong hands. But now as we kind of trade back into the 50-day moving average, price spreads are still narrow, volume's contracting a little bit. So it kind of looks like that we're going to reject the 50-day moving average on the daily chart, have to retest this area here. And then I would suspect that may give traders a nice long the test this area here prior demand. So I think we're still going to be range bound here.